Excellent. Well, it's great to see you and have you on, Adrian.
Thanks for having me, Dominic. I appreciate it. I'm happy to be here.
Yeah, excellent. So I've been really looking forward to this session today with you for a number of different reasons. I mean, I feel like you have a very unique perspective about, taxes and tax law. Before we dive into your career history and your experience and your knowledge, we'd love to just have you share a little bit about yourself with the audience and your knowledge and history in the tax industry.
Sure. So, hello, everybody. My name is Adrian Lopez. I'm a CPA here licensed in California, and I'm a former IRS Revenue Agent. I worked in their small business self-employed division for 2.5 years, doing audits of small business and self-employed taxpayers. Before that, did a couple years in public accounting and tax, and I was also a state government financial auditor.
Yeah, excellent. So wide range of experience there. Now, I think we should just dig right into it. So, as we work with a lot of small business owners, we want to make sure that we're always, doing the right things and compliant in terms of, they're not only their wealth management and their personal assets, but their 401k plans as well. So I'd love, for you to dig into the audience, as an auditor, what were some of those high level things that were kind of red flags to you that you were looking for? And where did you see business owners most commonly get tripped up?
Yeah. So in my time as an auditor, I will say I'd probably say some of the two biggest areas that would always kind of tip me off to, okay, maybe there's something not right here, or I have to kind of look into things. A lot of the times I know we always give the advice to taxpayers and business owners, like, hey, keep business and personal separate. I understand things happen, things come up, but honestly, that was always kind of an easy area for us to come in, is when we do an audit. We would look at the profit and loss statement and kind of see what they're spending money on. And, when you see like a Vegas hotel or something, or, you see like a bunch of coffees at Starbucks all the time, or things that it seems like it's a meal for just one person instead of, say, you're having a business meeting with a client. That business and personal separation really, really is important. I always strive and I advocate for taxpayers, please keep that stuff separate, because, if you do get an IRS audit, it's going to be one of those areas that they're going to highlight, is they want to look into, okay, is this a valid business deduction? What did you spend this on? What did you do here? How are you using, for example, your company vehicle? Like it's parked in front of your house, but you claimed on the tax return it's used 100% for business. Yeah. Like little things like that, it's really easy for the IRS to come and say, like, dude, look, we have an adjustment there, like that's not reported properly,
Certainly. Follow-up question to that. I mean, what types of documentation supporting materials would you want business owners to provide if you were questioning, whether expense was personal or business related?
Yeah, so for example, meals is a big one, honestly.
Yeah.
Whether it's like a hotel or casino restaurant, or it's even just something at your Benihana's down the street. Yeah. There's very specific documentation requirements about, okay, you paid for this money, who was there, what were you guys discussing, do you have meeting minutes from that day, do you have some sort of recording, do you have an Outlook calendar invitation where you can even see the emails of the people that you invited to that event and then you actually went and attended that event, also, even what's being spent at the dinner, there is a requirement to separate out anything that's lavish or extravagant. So, okay, you bought a guy a glass of wine, versus, okay, you guys had Jello shots at TGI Fridays, Right. There's when somebody comes in and takes a look at that from an objective perspective, someone could argue, okay, there's an element of this that you guys did Jello shots all night at TGI Fridays. Maybe that wasn't a business meal or business discussion, or sure. If you went to a really loud nightclub, it's were you really talking all that much? You know what I mean? The little things like that. I will say, as crazy as it sounds, context to things matters a lot. And that's going to be one of the areas that the IRS is going to be looking at when they're looking at your financial statements, is what's the context behind that deduction? How does this deduction help you make money? All those little things. The facts matter a lot.
Right. And so, as you've transitioned to being a CPA, are there specific processes that you encourage your clients to use to keep that documentation? Do you kind of have a general guidance that you're providing to clients?
Yeah. So for example, for my bookkeeping clients, I'm going through each transaction, and honestly, the stuff that appears to just be personal in nature, it's okay, the guy had to go do a job, 2 hours away, and he had to buy himself lunch. It's under the Internal Revenue Code, you really don't get a deduction for that. You would have had to buy lunch for yourself or pack a lunch either way, right? But for like some of the bigger meals, I asked my clients like, hey, was this with a client? Did you have an employee performance review, right? Did you take your employees with you to the meal? Can I get a receipt for that if it was $200 somewhere? Like that kind of tips me off when I'm going through and doing the bookkeeping, the accounting. Maybe this was a more business oriented meal. Maybe it's worth it enough to ask.
Right.
And I'm lucky. I have really good clients. They most of the time upload especially for some of the bigger stuff. They upload a receipt in QuickBooks Online. They actually have a little receipt capture tool. Yeah. And so it's easy. They can just take a picture of it. I can link it to the transaction. So 3 years from now, if God forbid the client gets audited by the IRS, I mean, literally, I can just go through the meals expense account and say, okay, yeah, I've got receipts attached to all this. Yeah. And I also make notes in the memo about, okay, this is what the client told me. This is who they were meeting with that day. This is what they were discussing. This is how long they were there. The receipt seems to support, okay, there was a meal between 2 or 3 people. Sounds pretty above board, Right. What the worst situation to be in is when you're, deducting all these meals or something that could be personal, right? And there's no documentation in there at all. There's no note in QuickBooks. There's no receipt. It's like that's and I can attest to this. Like, I've handed people a tax bill for $100,000 because they just didn't have the backup. Another key point I think a lot of business owners don't know is bank statements and credit card statements alone are not enough to usually justify business deduction. A lot of people think that it is like, oh, I did the credit card reconciliations, the bank reconciliations. Here you go, auditor. And it's like, dude, this is nothing. The only thing it substantiates is that something was paid and it might have been at this place. It doesn't substantiate what it was for. And so always having more paper and more of a paper trail than less is really what's important. It really is the difference between getting a clean audit and you own money.
Right.
So.
Yeah. All that is super, super helpful. Okay. So, avoiding mixing personal and business. And when you do have meal expenses, keeping very good records, receipts, emails, meeting notes, whatever it may be, and just having an organized process behind it. What else did you find were kind of the, red flags that you would dig in and look for as an auditor?
So particularly, I will say with Schedule C sole proprietorships, gig workers, or sometimes they're like a really small contractor or a tradesman, things like that. So the IRS, they look at especially if you're a sole proprietor, they look at kind of your financial picture in general, and they consider what's called your financial status, right? And so they want to find out, how are you affording to pay your rent? How can you pay your mortgage? What kind of revenue do you have? What kind of expenses do you have? How are you paying for those things, right? Are you paying with credit cards, right? Do you have a personal loan you took out? Do you have an SBA loan? Are you getting gifts from your parents? Are you getting parental support? And what the IRS auditor will do is they'll consider your financial status as a whole and say, okay, look, you live in a house that has, a $3,500 mortgage every month, and yet your take home from your sole proprietor business is like $60K a year. Right. You know what I mean? Like there's obviously like something's not adding up there. And I think a lot of the public does not understand that the IRS is doing that kind of analysis and trying to figure out for where you live, for what kind of trade you're in, for how much money you're bringing in, how much you have withheld in taxes, what's your mortgage interest expense? Does your whole financial picture seem to make sense? Because the obvious risk is that you are generating income from some business or some sort of profit entity and not reporting it, right? It's whether that's a cash-based business, sort of illicit activity. And sometimes it got down to the wire where I had to present someone's financial picture before them and say, okay, look, this is what you say you brought it from your business. These are your business deductions. This is your mortgage. This is your rent. This is what you're spending on groceries. Tell me how it makes sense, because the numbers don't. Right? And that's when you'd have to get into like, okay, yeah, like I take cash revenue. It doesn't hit the bank account. I use it to pay for stuff, whether it's a restaurant or all sorts of activities, hairstylists, right? Hair salon. Right. So many different trades. And I'm sure you work with clients all the time. And it's like, it's easy for income and sources of cash to be obscured, Right. And so that's where having a really good CPA, a really good, bookkeeper, tax professional, and just being honest and upfront with that person about, okay, look, this is how much I made, this and that. We got to report this the right way. You never want to be on the other side of an IRS audit and you knowingly like withheld income. Right. From the numbers, it's just not a good place to be.
Right. Because, tell me about like, the fines and the penalties and like how that all accrues. Because it's not just like, oh, oops, my bad. Like it's.
That's right. Yeah. So the biggest penalties that could be asserted in an IRS audit, there's going to be two of them. There's a substantial understatement penalty, which is it's kind of a computational math computational formula. If you basically understated your tax liability by $5,000 or more, you're going to get hit with an automatic 20%. And so, and 20%, some people might not think that's a lot. That's a lot. Yeah. There's also what we call a negligence penalty, which is basically we're not saying it's fraud, like the IRS isn't saying it's fraud, but it's enough that someone was not taking ordinary due care and business prudence, right? What could be expected of a reasonable person. That's a 20% penalty, you know. And on the high side, there's what they call the civil fraud penalty, which is if the IRS wants to go and try and assert that against you, and they can maybe prove that, okay, yeah, you actually intentionally evaded tax, or you knew what you were doing, you structured transactions a certain way, you journaled something in a certain way to try and get your tax liability down. That's a 75% penalty. And so, for example, if you're say in an audit, if your tax liability was $100,000, but they successfully enforced the civil fraud penalty against you, you're now looking at a tax bill of $175,000, and interest always has to be charged on any deficiency that the IRS assesses, both against you and then also sometimes when you get a refund, right? They owe you a little bit of interest back, as I'm sure you've seen with your clients. Mm-hmm. So between just the penalty portion and interest that has to be charged, especially with interest rates these days, it's you know, they're pretty high right now. Easily, it's like, dude, in interest and penalties, you could be having a tax bill that's more than just the tax you would have owed in the first place.
Right.
You know, it's really important to always get that right on the front end and do the due diligence and have the business prudence on the front end to make sure you're reporting your tax correctly. Because really, on the interest, no one can abate interest. The IRS can't abate interest. Your CPA cannot request an abatement of interest. It's always going to be there. If you owe, they will calculate that back from when you owe the tax, and you'll owe interest on that. And then penalties too is just killer.
Right.
Absolutely.
Totally. Can we talk about S-Corps a little bit?
Yep.
And reasonable compensation. Can you walk our audience kind of through that?
Yeah, so the basic idea, and I hear this a lot, honestly, it's one of those hot button topics between S-Corps and like, oh, should I have an LLC? It's one of those things.
Yeah.
So I don't want to bore people with the tax law, but basically, if you are an S-Corporation and you are performing the work for your S-Corporation as a shareholder employee, you are expected to be paying yourself a reasonable salary so that your FICA and your Medicare taxes are being remitted properly, so that you get your Social Security credits, but also the employer portion is being remitted to the government and to the Social Security Trust Fund, right? Mm-hmm. And so where you don't want to be is if you have an S corporation, which you're actively working in as a full-time employee, you're performing services, right? And say you're taking distributions from your business, you had say $200,000 net profit, and you have zero wages at all, right? Because distributions from an S corporation are not subject to a FICA and Medicare taxes, but the IRS expects, hey, you know, there's no such thing as a free lunch, right? Nobody works for free. Right. And so they both want you to have your Social Security credits, and they need you to be paying those payroll taxes. You know, you got to be paying, you know, the federal unemployment. You know, states as well. They care a lot about this. It's a hot button topic. They want their fair share. You know? Yep. And because they want to discourage free riders and people not getting a benefit from the Social Security system without paying in. And S corps and distributions can be a way to do that if it's not done properly. And so. As far as reasonable salary, I know there are like reasonable compensation platforms out there that will do a study for you. I highly recommend you do that. Honestly, the IRS kind of looks at it pretty simple. It's usually one of two questions. One, what kind of work are you doing in the S corporation, and what would you pay somebody in the fair market to do that kind of work, right? So, for example, an attorney. I remember one time I prepared a tax return for an attorney. This was a few years back. And they had you know, decent net profit. It was like $160,000 or something, and their W-2 wage was $40,000. And so I remember telling her when we prepared the return, I was like, "Hey, look, let's be honest. Like, I don't know of a lot of attorneys that are making $40K, and she was the sole shareholder of this legal corporation. I'm like, look, you know, going into the future, you're gonna want to bump that up because it just doesn't seem reasonable, you know. And of course, she had the right to take distributions on other money, but it's just like $40,000 for an attorney, you know." Right. It's I think in a layman's term perspective, or like your average reasonable person, somebody might say, that doesn't exactly look right, you know, versus say someone who's a general contracting manager, you know, the guy makes 120, 130,000 a year. Yeah, you know, that might make sense, especially according to the Bureau of Labor Statistics. That's a big place where the government, both state and federal auditors, will go. They'll
Right.
look at your zip code. They'll look at, okay, what is a general contractor manager making? You know, how much is this person paying? Any sort of reasonable compensation platform should also be looking at those kind of statistics. Those are really useful statistics if you're labor statistics. You know,
Sure. Yeah.
that's how that whole reasonable compensation thing will go down. So I'm sure as a wealth manager, you're also trying to help your clients. Hey, you know, with certain W-2 compensation, we got to do this for the 401k matching, referrals. You know, it's got to be a certain way to get your max benefit into that 401k account. I highly encourage you to do that and make sure, you know, just trying to help your clients have the best. Hey man, maybe we should bump up that W-2 a little bit. You know, let's get some more elective deferrals in there. Let's up the employer contribution, you know, the match. Yeah, very important area. Absolutely. Very important.
Yeah. So another thing that I've been seeing on like TikTok and like all these other platforms is, you know, kind of another hot topic is like, you know, I see a lot of content out there about putting your wife on payroll and your children on payroll. Tell me more.
Yeah, so you know the truth is there are a lot of I don't call them loopholes. There are provisions in the tax code. For example, if you have a child working in a family business, as I believe, as long as you're a sole proprietorship or a single member limited liability company, don't quote me on that one. I think it's got to be at least a sole prop and maybe LLCs. There's actually a provision that you don't have to withhold FICA or Medicare for your children, and as long as I think you're paying them under the standard deduction, which I think right now for single individuals like $12,000 a year, somewhere around there. It's a deduction for you, and then because it's a standard deduction, they're not even going to owe federal income tax on that, right? They just get a flat. It's basically like free income, I guess, to them if you want to, you know. But they have to be your biological children, and you have to be set up a certain way. There's little things like that, especially if they're actually doing work for you,
right?
You know, that's okay. Yeah, if you have a grocery store, if they're doing sweeping, if they're doing inventory counts, you know, they're hanging out with you 10, 20 hours a week. It could be legitimate. And don't get me wrong, if it's a 3-year-old, the IRS or FTB or something might come asking a few questions, you know, but it's like, yeah, if you have a kid, he's 13, 14 years old, and you can articulate, like, what does he do? How much are you paying him for? Do you have documentation to support that? What are his job duties? You know, how often is he there? You know, it might make sense, at least in a family business, you know, when it gets to different business entities, C corporations, S corporations, it's a little different. But sole props, you know, family-owned businesses, I'm sure you work with clients all the time. They got their kids working in the business. They got a restaurant. They have some sort of grocery store. They have things like that. And the kids participate.
Yeah.
You know, there is this mechanism that you can pay them, put them on payroll. They don't pay FICA. They don't pay Medicare. You get a deduction for it. It gets a little bit of money in their pocket. As long as their income is also okay, I think you could even look into like putting some of those wages into 529 accounts for them. You know, Roth IRAs, that kind of thing. Just as long as they're under, I believe as long as they're under 18. Yeah, once they hit legal age, it's different. Especially with your wife as well, kind of a similar thing. You know, you can have your wife be on payroll in the business, and as long as you're withholding the FICA, the Medicare, you know, as long as the compensation is backed up and documented with documentation, yeah, it's fine. You know, if she's working and helping you out in the family business, it makes sense to do that. You want her to get credit for Social Security and for Medicare. You know, if she's working and helping you in the business, maybe she's employed somewhere else as well. That's totally fine. It's going to be a problem for, you know, state governments and the federal government if it's like a phantom employee. You're just doing it to transfer money into somebody else's pocket. That's a family member, especially if it's a wife, if it's lineal descendants, either your parents, grandparents, or your kids, you know, kids or grandkids. It's got to be reasonable. It's got to be backed up with documentation. They're like, yeah, they actually work for me. They do stuff.
Right.
You know, otherwise, yeah, I don't want to say it's like tax evasion or anything like that. It's just like, it doesn't look good. You know, and it would make a government revenue agency kind of think, okay, what else are you doing? You know, what other areas should we be looking into?
Yeah, certainly. So I think the key takeaway here is, you know, document, right? So if you are going to do that, make sure that, you know, you're paying reasonable wages, being able to clearly articulate their responsibilities, what they're doing on an ongoing business to help them support the business. And then, you know, you can certainly sounds like you can take advantage of those, you know, advantages. So that's super helpful. What else would you add, or, you know, kind of, you know, the hot button, you know, topics that you're addressing with some clients? What are some of those common questions you receive?
You know, I will say I've been talking to a lot of both potential clients and then also getting new clients. They all kind of have a question about, okay, I've been doing my books for a couple years. You know, now that my business is picking up, it's getting increasingly difficult for me to just kind of do it myself. It's kind of a pain. You know, is it time for me to start looking into a professional to handle that and to do that? from my perspective, because I want to get the business and I want to help them out, I would say yes. I'll be perfectly honest with some people though, where I'm like, look, I think you probably could have a professional. Would it be my caliber, a CPA and former IRS agent, handling your books and doing your individual business tax return? There are different price points for people. I will say I try and be reasonable. I try and be fair. I got to be compensated for my expertise and my value. There are different price points. There are people who charge less than me. I'm totally open to that. I will be honest with clients and prospects about, look, I think you're a little bit below my level. And also I know when maybe a business needs more attention than what I can personally give them. That's totally fair. But I would absolutely encourage any business owner who is like, okay, look, I'm spending too much time doing my own books, running payroll, doing this, doing that. And maybe it's time for me to consider, working with a professional. I highly encourage that.
Right.
I highly encourage taxpayers, be your own business advocate, vet your professionals that you want to work with, vet their credentials. Are they a CPA? Are they an enrolled agent? Do they have an accounting degree? Are they licensed? Are they bonded? I highly encourage that. And just be I would also say be especially cautious with anybody that seems to be charging maybe too low, or it's like too good to be true or too good of a deal. I hear that all the time from prospective clients is they're like, I'm working with somebody, I can't get him on the phone. He can never return an email. I don't understand my tax return. My books are not up to date. It's been 6 months since he's done the bookkeeping. What exactly are you paying for, right? If you want responsive, good quality service, you want to trust that the work's being done right, the best advice they can give to somebody is you get what you pay for when it comes to professionals, especially CPAs, enrolled agents, tax attorneys. Be cautious of anybody charging H&R block prices.
Right.
It's just one of those things.
Yeah, absolutely. So quick follow-up question to that, and I don't mean to cut you off, but what is that threshold point where someone should really think about, okay, I'm doing it in-house now. Maybe it's the spouse who's on payroll and she's handling the books, right? At what point, what is that crossover threshold where it's like, okay, yeah, we should really consider hiring someone?
I would say it's only anecdotal. I would say if you're starting to bring in revenue kind of in the 6-figure range, I think anybody who crosses maybe 100 or 120,000 in revenue, probably getting up there, especially around 400,000 or 500,000. That's probably the point where you can consider, okay, maybe I do need a bookkeeper. Maybe I need to be working with a tax professional. I want to make sure that I'm getting all the credits, all the deductions that I'm eligible for, that I'm getting timely financials, right? I'm able to sit down with the professional and say, hey, look, my revenue's been up the past 3 quarters. What am I doing right? Oh, wow, my COGS has gone up the last 3 quarters. Hey, where can we tighten things up? Just being able to have those conversations with someone, and you're not, knee deep in the books at 11 p.m., every month end, trying to do bookkeeping and kind of figure things out. Sometimes outsourcing that to your local CPA or your local enrolled agent might not be the worst idea, especially once you're hitting 6 figures in revenue. I would think if you're under that, resources like TurboTax, there's automated bookkeeping, there's like Xero and FreshBooks, small, very inexpensive, low transaction, low complexity bookkeeping and accounting solutions. Yeah, maybe for the person making under $100,000 a year, that's totally fine.
Right. Yeah. Totally. I mean, I think the other thing that I encourage business owners to think about is like, okay, what is the value of your time, right? So if you're doing whatever, is, the highest revenue maker in your specific industry, like what is that worth? And like compare that time to what you could outsource, for someone else to do the books, right? So like, is it worth your time? And another thing that you'd brought up in a previous conversation, like you were talking about how there's a decent amount of outsourcing, which is happening in the CPA industry, and how some CPA firms and bookkeeping firms will have people overseas doing a lot of the processing. Like, would definitely love to chat a little bit more with you about that. Like, from your standpoint, what are the risks? Are there opportunities? Is this good? Is this bad? Like, what does it mean for the future of the industry?
And I can only speak for myself as a CPA, working here in the United States. I personally don't want anything to do with outsourcing or offshoring. I have colleagues. I talk to people daily. I have colleagues in other accounting firms, and they run their own practices. They have bookkeepers in Mexico. They have bookkeepers in the Philippines. They have bookkeepers in India. And they usually tell me, they're pretty decent. They're a lot cheaper than being able to find somebody here. That's always actually kind of been one of the biggest complaints that I've heard from other professionals in the industry is it's hard to find good talent. If I do find them, I can't pay them enough so that they'll stay. Sometimes they want to go start their own shop after a little while. So, it's sometimes they're just like, maybe I should just outsource and save some money, get the job done to a decent degree. and people come and go, especially in India, the Philippines, versus somebody here, you're paying somebody, especially a qualified professional, say in Northern California, 70, 80, 90, 100,000 a year. And you might be able to hang on to them. Maybe you can't. Maybe they're looking. Maybe they get tired of the hours. They're looking for their next opportunity. Maybe they're just like, I'm just going to start my own practice because I don't want to work so much. There's so much, and I think outsourcing and offshoring is only just going to muddy that water a little bit. I think a lot of the CPA firms around here will say, look, I'm saving money. I'm just hitting the bottom line. It helps keep me in the black. I don't exactly know how American taxpayers feel about that.
Right. I don't even know, right?
Yeah, I don't even know if they know, because for example, if you're sending and this is something useful for taxpayers to know. If you're sending confidential financial information overseas for the purposes of tax prep, there actually has to be a disclosure that you have to sign. You have to authorize your tax firm and your tax preparer to allow you to do that. Here's the thing: is they're under no requirements for bookkeeping work. Right. Oh. And so if you have someone in the Philippines or India doing your bookkeeping, this and that, to my understanding, there is no legal or regulatory requirement that the bookkeeping firm even tell you that they have people overseas looking at your stuff. It's only if it's your private individual information as far as your tax returns, social security numbers, things like that. That's when they're required to get your consent. Hey, can we disclose that to somebody else? But if it's just bookkeeping work, I think, I'd be hard pressed to say if they'll even tell you, oh yeah, I've got a guy in India looking at your stuff every month. Yeah, it's not me. And so that's why I really encourage for taxpayers. I encourage you to ask those questions. Who is really the person working on your stuff? Do they actually work here?
Yeah.
I put it right on my website. Honestly, you're working only with me. I don't use outsourced contractors. I don't use outsourced bookkeepers. They're not offshore. You're not working with anybody but me. I'm doing your stuff. I'm the guy. Yeah. And I intend to keep it that way, whether that is going to, run my business into the ground or I'm going to blow up and have this big boom. That's just what I feel comfortable with. I don't want my clients, their financial information, their bookkeeping, their financial statements, balance sheet, profit and loss, especially their tax information. There's no way I'm bringing somebody overseas to look at that kind of stuff.
Yeah.
That's just me. Other firms are going to do what other firms are going to do. I encourage taxpayers, ask those questions, look at the engagement letters, find out, who is working on their stuff.
Yeah.
I highly encourage taxpayers to ask that question. Vet your professionals. Absolutely.
No, I mean, the first thing, like, as far as like the risk, like, the first place that my mind goes to is like, what if that information gets compromised? Like that's, that would be super scary. Like not only for, the individual client, but like, shoot, for the firm as well. Like,
exactly correct. That's right.
So anyhow. Awesome. What else? Anything else that are common questions or things you're hearing from potential clients? Anything else you think we could touch on?
Yeah, it's funny. I hear a lot of questions. Prospective clients will ask me like, what are some of the triggers that lead to an audit? Honestly, it's hard to say. A lot of it is kind of random. So I've done dozens of audits. Hell, I've probably maybe even estimated like hundreds, right. And a lot of people say like, oh, there's a certain thing that must have triggered it, or are you looking at this certain item that was a flag? Honestly, some of them are random, to be perfectly honest with you. There is an algorithm, there is a discriminant function score that the IRS has. Mm-hmm. Like, hey, this tax return seems to be out of the norm. We're not saying there's anything wrong with the return. It's just a return of interest that we would like to go and audit.
Mm-hmm.
I never want to have a taxpayer assume like, oh, you've done wrong. Where's the mistake? We're going to get you a tax bill, something like that. Sometimes it's far more innocent than that. That doesn't mean there isn't a tax adjustment. I rarely worked an exam where I didn't have an adjustment. Then again, I was very good at what I did. Mm-hmm. I don't want taxpayers to feel like, oh my God, I did something wrong. I got an IRS audit. A lot of it, honestly, is kind of random. There is this algorithm out there. Mm-hmm. They just plop the return on the auditor's desk. Hey, here's another case to work. Have fun. Right. There's I think some people think like, oh, they're targeting me or something like that. It's it's really not that. It's not that intentional. Yeah. You'd be surprised how much of the IRS is almost like happenstance, kind of. It's like accidental, or at least random. There's not exactly a human, clicking and targeting people. I will say what is the only anecdotal experience I have is I did get audits that came across my desk. every now and again. I don't want to say it was all the time, but I got audits that came across my desk every now and again that were audited before, and there were adjustments before. I will say that was something. It was always kind of a pain. I sent out the letter. I swear I can't tell you how many times I got this. The guy was like, "Dude, I'm getting audited again." Like I'm serious.
Yeah.
Those. I can't say if that's common. I encountered it a few times. Sometimes it was okay. They had an audit in the past. There were big adjustments. Now everything's fine. Once or twice it was okay. They've been audited before for a similar issue. They got away with something or there was no adjustment. Now we're going after it, and yes, we're going forward.
Right.
There's so much nuance to it. I don't want to, try and tell people avoid these things and you'll avoid an IRS audit.
Right.
It's really not that systematic. There is a level of randomness to it. My only suggestion to taxpayers, please keep business personal separate. If you can afford it, work with a qualified professional. Make sure your financial statements and your books are in order. Making sure your tax return is being prepared properly. That's the best advice I can give to anybody, because honestly, there's little else. Make sure you're also reporting all your income. There's little other advice that I can tell you. If you do these 10 things, you'll avoid an IRS audit. It's just not.
Yeah.
It's not that systematic.
Yeah, no, that makes sense. Now, I would like to flip to kind of a different perspective on this
Sure.
all. What would you say are the most common missed opportunities that you would see, from a tax perspective?
Let's see. From what I saw, I will say, like, just anecdotally, looking at people's tax returns, a lot of them had like W-2 compensation, or they were self-employed, sole proprietors, whatever. They weren't maxing out retirement accounts. Honestly, that was kind of one of the easiest places to see. Like, I would even sometimes question, like, hey, looking at the Schedule 1, did you make any sort of self-employed retirement contribution? They're like, no, I don't even have a solo 401k. I'm like, when you're, it'd be something just kind of offhand, like, with your net income, you could have stuck some money in this thing, but I get it. Everybody's got a different financial situation. I understand. Right. One time I did an audit of a gentleman, and his tax preparer had not even asked about self-employed health insurance. You get a self-employed health insurance deduction for the premiums that are for you and your family and your children. I looked at the return and I'm like, hey, dude, it was there last year. It wasn't there this year. Did you have health insurance? And the guy's like, yeah, wait, my CPA didn't put that on there. And I was like, no. And I got the guy like a $21,000 deduction just because I asked. And I'm like, dude, my job is to get the tax return right, not to shake you down.
Right.
I made that adjustment in his favor. And he's like, dude, thank you. I wouldn't have even known to look at that if the audit hadn't come up. My guy missed it. He didn't ask about it. I thought he would. And just little things like that, the preparers, they miss things. I understand people make mistakes. There's things that happen. You have a million other tax returns you're working on. I always encourage the taxpayers, look, sit down with your CPA, review the tax return, make sure you understand it. Be your own best advocate for that stuff, because that's how things get missed, right? Maxing out your solo 401k or your SEP IRA, you paid for self-employed health insurance that isn't deducted on the return. Little things like that. It might make the difference between owing and keeping some money in your pocket.
Right.
And I always encourage taxpayers, please be your own best advocate for that.
Yeah. Absolutely. I mean, you definitely touched on one of my hot buttons, which, I'm super passionate about, in terms of, retirement plans, retirement plan savings. Like, there's so many things that you can do, not only to save money in taxes now, but be financially well prepared for, your future, and, provide not only for yourself, for your family, create a legacy. I can go on, but, that is definitely an easy layup, to ask your tax preparer, like, hey, am I, maxing out all my retirement plans, or is there anything else? We touched on cash balance plans in previous conversation. Like, how often when you were doing these audits, how often did you come across cash balance plans, if at all?
No, never. Honestly, I was lucky if I encountered an audit where someone did have some sort of solo 401k, or maybe just a traditional 401k for their employees. It was actually kind of rare, honestly, to see somebody with a solo 401k, especially if they had plan assets that require the filing of a Form 5500. It was somewhat rare, and it's funny because they would always, the taxpayers on our audit sometimes would ask me, like, hey, what can I do to, like, pay less in tax and this and that? And I'm like, look, I'm not your advisor. I'm not your CPA. Maybe ask your CPA about this and about that and about that. I saw that you don't seem to have one open. with your net income from your sole proprietorship or whatever it was, like, dude, you could have stuck like 57 grand in this thing, and here's why. And they're like, okay, yeah, like, thank you. I'll take that information and go talk to my tax guy. It's always a tax guy. I got a guy for that, So, and I, it's like, I get it. You don't know what you don't know when you're a sole proprietor and you're running your business and you're doing this and that. And, you got 200K net income. You don't know what you don't know. And so I would always encourage, go get a sole 401k, learn about it, talk to your tax guy about it, talk to a financial advisor such as yourself, Dominick, about that. Absolutely. Those are good opportunities.
Cool, man. Well, before we wrap up, anything else you'd like to share?
I just started my practice, so if anybody needs a CPA or is looking for small business accounting or individual business income tax prep, I'm over here in Rancho Cordova, Adrian Lopez, CPA. I look forward to working with professionals just like yourself, Dominick, and building a professional working relationship.
Yeah. Excellent. So do you have a website, or where can people find you?
Yes, I do have a website. It's going to be anlcpa.com.
Excellent.
Schedule a consultation, take a look at my pricing, and I'm always a phone call or an email away. So.
Okay, rock and roll. Well, Adrian, today's conversation was awesome. You had a lot of really great insights. So thanks so much for being on and sharing with our audience today. And it's really interesting to see how the industry is going to change over the next 15, 20 years. And I think there's absolutely always something to be said about working with a high quality professional such as yourself. I mean, you want that, tax person, that advisor to have your back and know that, they have a good process. So thanks again for sharing your insights.
Thank you for having me, Dominick. I appreciate it. Hope to be on again sometime soon.
Yeah, no, look forward to it.
Thank you.
All right, thanks, everyone.
Thank you. Bye, everybody.